In this video, we're going to talk about trader psychology and conquering the demons inside your mind. Now, believe it or not, one of the biggest reasons that many traders fail is because of their psychology, because of their mental state. Even a winning system can fail if you don't control your emotions. Now, if you're a new trader, you probably are going to look at this module and think, you know what, I don't need to look at this. I don't need to watch this because I know I'm a strong person and I know everything that I need to know. I need to focus on that system. I need to focus on that magic formula for being able to get me into the market at the right time. Well, listen to me when I say that. Even if you have the right system, if you can't control your emotional state and you can't get out of a place from trading emotionally, then it doesn't matter how good the system is, it doesn't matter how good your technical analysis is, you will not be able to make money because you will make stupid mistakes and then you will compound those mistakes by making other mistakes out of trading irrationally, revenge trading, and just generally trading emotionally. So in this video, we're going to talk about some of those things you're going to come up against, and then finally we'll look at some of the solutions that you can look to put in place to get you over this hurdle. And it is a very, very big hurdle, as I just mentioned. It's one of those where many traders fail. So if you can get a hold of this, if you can start to look at your trader psychology and take control of it, you're going to put yourself a step ahead of the rest of the rookie traders out there. So the first part of your path to discovery and understanding everything there is to know about trader psychology is understanding that we've actually got two forms of capital. Now, the majority of the time as a trader, we always talk about our account balance, our monetary capital and all of that good stuff. And all the while, we're actually missing out on one of the most important sources of capital that we've got, and that's our mental capital. Now, you can't have one without the other. So there's no point in focusing on the monetary capital without focusing on your mental capital, your psychology, your emotions. Okay, and that's why we've put this video together, because traders underestimate the importance of the mental capital. Now, just to show you the importance of it, let's take, for example, any system. Now, let's assume that trading that system, you've taken a 50% drawdown in your account. Now, nobody wants to have a 50% drawdown, but let's just imagine hypothetically, you destroy your account by 50%. Now, from a monetary perspective, you still have 50% left. So you've still got more than enough money to continue your trading. However, from a mental perspective, you've probably all but depleted your entire sources of mental capital and then borrowed some to destroy some more. Okay, because when you take a 50% drawdown in your account from a mental perspective, that's a very big one and a very hard one to pull yourself up from. So even though you've got the monetary capital there, your mental capital no longer exists. And that's why it's important to understand that we have two forms of capital, our monetary capital and our mental capital. And we need to not underestimate the importance of our mental capital. And that's why you need to watch this video. You need to do all of the reading you can. So do things like read Trading in the Zone by Mark Douglas, all of that kind of good stuff, because this is just as important as the trading system itself. There's no point in having a good trading system if you can't control your emotions and you can't control your psychology, because you'll make stupid mistakes, you'll do stupid things, and the system will count for nothing. So what are some of the issues that you're going to come up against? Well, the first is that of fear and greed. Okay, so fear is going to get into your way in terms of fear of giving back profits. That's a massive one. So for example, you're going to face an issue as a trader where you will have taken a few losing trades in a row, for example. And this is generally the way that this one leads up to it. So you've taken a few losing trades in a row. You're in a profitable trade for the first time in, let's say, 2 or 3 trades. And you think, oh, there's some profit there. I don't want to give it back. So I'm going to move my stop to break even, or I'm going to take the profit off the table now. Now, either one of those decisions, if they're not part of your trading plan, they're going to have a negative impact on your bottom line. They're going to have a negative impact on your trading because it's not something that you've planned to do. It's something you're doing out of emotion. You're scared of giving back the profit, so you take profit too early. Okay, and that's a massive account killer, because what it means is that you'll take a series of regular size losses followed by a series of small size profits. And what you're doing there is you're not giving yourself a chance of being successful, because even when you are in the right trades, the ones that make you money, you don't take enough out of them. Another way that fear can affect your trading is that if you're scared of taking a loss, this can cause you to let a small loss turn into a big loss. So how many of you guys that have been trading there have put in a stop loss, and then you've said to yourself, you've seen the market coming towards your stop loss, you don't want to take the stop loss, so you say, you know what, the market's probably going to turn around, I'm just going to move my stop away a little bit because it's probably going to turn around and I don't need to take this loss, so if I just move it here, the market won't hit it and then it will turn around and make me some money. And then what initially would have started out as a small loss, so 1% of your account or something like that, starts to turn into a big loss, and then a bigger loss, and then a bigger loss. And we've had a particular member who's won the prize for this, who ended up taking what started off as being sort of like maybe a 40 pip loss or something, ended up taking something in the region of, I forget the exact number, but between 300 and 400 pips loss on his account. All right, so, you know, 6, 7, 8 times what he initially planned on, just because he kept negotiating with himself. And that's what fear can do for you. Fear can also stop you taking the next trade. And this is something that we call performance anxiety. So similarly to the one where we talked about, you know, you'd give profits back, it actually can stop you taking the trade altogether. So if you've taken 1 or 2 losing trades in the past, or 3 or 4, however many, but if you've had some negative trades in the trade leading up to the one you're about to take, you can be so scared of losing money that you don't even take the next trade. And then you know what happens? As soon as you don't take that next trade turns out to be a massive winner. And then that massive winner encourages you to get in the next trade, which then turns out to be a loser. Then you don't take the next one, which again is a winner. And you've just completely screwed up your system there. You're trading an absolutely different system to the one that you've planned, to the one that you've written down in your trading plan. This new system that you're trading is the I'm emotional and I'm going to just trade when I feel good trading system. And that's not the trading system that's going to get you to your end goal, believe me. And then finally, greed. How does greed affect us? Well, getting greedy causes us to take bigger risks. So where we were talking about the performance anxiety because you've had some negative trades, the opposite of that is if you've had some really, really good trades, you start to get greedy and you feel like you're invincible. And instead of taking 2% risk on your account, maybe you take 5% or 10% or something ridiculous like that. And you know what happens as soon as you take that risk? Bang! The market comes and it hurts you. It gives you a loss, which ordinarily would have been a 1% loss. But now, because you've just taken 5 or 6 good trades in a row and you've decided to up your risk to 5 or 10% of your account because, you know, you can't do any wrong and everything makes sense to you and, you know, you are the market magician, so to speak, then you've taken a big loss and it's just wiped out all of the profits that you've just made. So fear and greed is a very, very big one, and that's the way that it can affect you in your trading. Now, don't worry about the solutions just yet because we'll get to the solutions later on in this video. But right now, I'm just trying to describe for you some of those feelings, some of those experiences you're going to have as a trader if you haven't already had them. Another element that can affect you as a trader is confidence. Okay, and we're talking about both a lack of confidence and too much confidence. And there's a fine line between the two. And either of the two can equally hurt your trading and hurt your account. Now, you need to be confident in your system to be able to place trades even after a string of losing trades. You must have that amount of confidence in your system. But if you're overconfident in your system, if you feel like you're invincible, as I just mentioned on the last slide, so it tends to occur after a series of winning trades. If you're overconfident, you're going to feel invincible and you're going to take larger positions with less analysis, which in turn is basically going to destroy your account. So in the last slide, I talked about, you know, you've taken a couple of good trades in a row, you start to up your risk and then bang, the market kills you. And that's exactly what happens with overconfidence. A lack of confidence is exactly the opposite. So after a string of losing trades, you shy away from taking the next opportunity. And the next opportunity is a perfectly good opportunity. It's one that would have made you money. But because you don't have enough confidence in your system, you don't take it. And then again, you're creating a brand new system. So you need to find the fine line between too much confidence and too little confidence. And somewhere in the middle there is where you need to be a successful trader. Because if you fall too far on either side of those lines, unfortunately, you're not going to do very well in the long run. So to start to get over this, to start to be able to take control of your emotions, you need to do a few things. And we've talked about this in other videos, and we will talk about it as we create other videos for this course as well. But it's primarily all focused on outcomes and the outcome bias. You need to start to accept that losses are a part of the game. There's nothing that we can do to eliminate losses. So we need to look at losses as just a cost of doing business and nothing more than that. You can't start falling victim to revenge trades. Now, if you haven't heard of that before, a revenge trade is a trade that you get into directly after taking a loss because you want to make all of your money back. You're angry at the markets because the markets have just cost you money and you're going to show the market who's boss. And you get into a trade that you don't do any analysis on, and your mistakes compound on top of each other, and you just end up taking bigger losses, and you keep digging that hole deeper and deeper and deeper. So you need to start to judge your trades on the executions and not the results. So you can't be worried on whether the trade makes you money or whether it loses you money. You just need to start to focus on the trade execution aspect of it. You need to focus on taking, the right setups over and over and over again. And if you can focus on that, then you'll be starting to put yourself in the right place to make money from the markets and to make money consistently from the markets. But if you can't do that, then you're always going to be trading emotionally. Discipline really is the key to success here. So I've given you some of the issues that you're going to face. What about the solutions? What can you do to get over this? Well, we've got a few suggestions for you here. First of all, you need to backtest and you need to compile detailed statistics. Now, I talked about this a lot in the backtesting module, but I'll just go over it again very quickly here. Backtesting allows you to compile statistics on your trading system, so you know what to expect from your trading system. You understand that your trading system can have five losing trades in a row. So if you're in a situation where you've taken 3 losing trades in a row, there's absolutely no reason not to take the next trade because it's expected of your system. You're not doing anything abnormal. The system has done this before in the past and it's been profitable, and it will do it again in the future and it will be profitable. So backtesting allows you to compile statistics and information about your trading that can give you confidence in the heat of battle. Something else that you can do is visualization exercises. Now, I know a lot of you guys will probably say, that's just kind of, some new age stuff and it's not really going to work and it's stupid and I'm not going to do that. But believe me, it does. If you can take some moments each morning to visualize, yourself as a trader, visualize yourself executing the trade according to your plan, and then visualize yourself doing the right thing and not being worried about losses. So experience taking losses in your mind so that when it comes to experiencing it in the market, it doesn't do anything to you. It doesn't cause you pain. It doesn't cause you to make mistakes and things. Okay, so visualization exercises is quite a big one. It's something that can definitely help you. And of course, you want to have a solid trading plan. That goes without saying, but you must have it. Create a solid trading plan. We talked about this in the trading plan module. If you have a solid trading plan in place, you have all of your rules there. So you know what the market condition has to look like for you to take a trade. You have all of your entry rules, and then you can focus on making one good trade at a time. You can focus on executing according to your solid trading plan and not being worried with the outcome, not being worried with what happens with any one particular trade, but just focusing on taking the right trades at the right time and doing the right thing. And finally, you'd want to keep optimized trading records. So you need a way to measure whether or not your system is underperforming or whether you're underperforming. And by keeping optimized trading records, which what we talked about in the trading plans module, by keeping your optimized trading records, you're going to be able to have that comparison. You're going to be able to make that comparison between what you're doing in the markets and what your system would have done had you not got involved and had you not started to trade emotionally. Right? It gives you sort of like an objective look at your trading. So in conclusion, there is no shortcut or easy answer. We must find a way to remain disciplined in this market because that ultimately is the only way that you're going to be successful in the long run. In the short term, yeah, of course, you can get lucky, you can trade emotionally, and you can make some money. But if you want to be in this business for the long haul, you need to find a way to remain disciplined. And one of the ways of doing that is to embark on a journey of thorough back testing. And in the early stages, after you've done your back testing, in the early stages of your trading, you need to follow your trade plan to the letter. You cannot deviate from it. You cannot second guess it. You need to trade it exactly as you plan your trades. And once you start to do that, you'll start to instill some discipline in your trading, and you will see that directly impacting your results of your trades. Because remember, you're most rational when money is not at risk. So you do all of your analysis properly beforehand, and then you just trust your plan. You trust what you decided to do when you had no money on the table. You just follow your plan, you're disciplined. Then when you have money in the markets, you don't have to worry about anything because you're just focusing on trading according to your plan. And if you do that over and over and over and over again, you will come out ahead of the game. Okay? So thank you very much for watching this lesson. I hope it's been useful to you. If you've got any questions, as I say in every single video, and you're probably so bored of it by now, please post it below the video or drop us an email, and we'll look forward to speaking to you on the next module. So take care now and have fun.